is Geneva, and I will be your chair today. I use she, they pronouns, but I would prefer that you address the panel as a whole. Speaking of which, I will allow them to introduce themselves on the order of which they appear on the drawer.
Hi, Anna. I have no preferred gender pronoun. Good luck, everyone, and congrats on reaching the octaves.
My name is Josh. I go by masculine pronouns, but I encourage you to refer to the panel as a whole. Well, once again, congratulations to all the teams for making it this far, and best of luck to you in this round.
Hi, everyone. I'm Nolotando, and she, they pronouns. However, to refer to the entire panel as a whole, and congratulations to all of you. Best of luck for the round.
Hi, everyone. I'm Omar. I go by they, them. Best wishes.
Awesome. Okay. Would one of my lovely wings be able to time, please?
I'll help.
Awesome. Awesome. Thank you very much. So Omar will put 1 minute in the chat, 6 minutes in the chat, 7 minutes in the chat, and 7:15 in the chat. Although given by the huge uptake from everyone on the panel to want to do this, sometimes this is quite a difficult job while writing notes. So please do also time yourselves because there is a possibility that Omar will miss them. I myself do that frequently, hence why I tried to push it off to my panel. What we're going to do is go through each speaker team and we're going to ask for your order and your speaker preferred pronoun if you have any, starting with the lovely opening government.
Hi, Shoria speaking first, no preference.
Hi, my name's Ted. I'm speaking second. I prefer the he series pronouns, please.
Opening up.
Roman speaking first, Alex speaking second. We have no preference, thank you.
Closing gov.
Speaking first is Lachlan, he or they, please. Speaking second is Vivek, he, him pronouns, please.
And last but not least, closing government.
Yep, Dion going first, Sean going second, no preference.
Perfect. So on the motion, this House would ban corporate residential landlords. I welcome the Prime Minister to kickstart the debate. Hear, hear.
Hello, am I clearly audible? Okay, awesome. All right, before I begin, I'm not looking at the chat. So if you have a point, please don't type out point of information, just unmute and then say point. And I'll take you at least once. I'll try to take CO and hopefully as soon as possible. So like maybe after 1 or 2 minutes, just ask me POI. And opening opposition as well, I'll try to take you as well if I have time. Okay. Yeah, verbal POIs. Okay, starting my speech in 5, 4, 3, 2, 1, go. The easiest way to make a huge amount of money from a highly inelastic good, specifically something that people desperately need to pay off every month, otherwise they are literally homeless, is to form a monopoly. And that's what happens on side opposition. The framing here is important. First of all, often corporations buy a huge amount of housing geographically. This often looks like large housing complexes that occur all across a certain area, which are connected to a certain industry, which is important, for example, like central London. And the structural reason for this obvious: first, it just avoids competition. Second, because there's already such a high startup cost to actually investing in this. The people who do invest often have enough money to buy large amounts of housing. And it's just much more efficient if they pool together their resources and make a larger corporation. In fact, competition actually harms all of them, which means often, even if they don't form one big conglomerate, there's collusion. Specifically, people often can just have a few oligopolies where there's a few housing complex apartment owners who can just cooperate to have a specifically sky-high rent. But second, note the framing. Often they will lobby for increasing regulations. Uniquely, often existing complex owners will lobby for more restrictions and more regulations to building housing. They actually slow down the construction of housing on side opposition. Because note the logic here. If it is harder to build a house, it is harder to break into the market. This is why pharmaceutical industries often increase the cost of creating new medicines and selling them, which means it's more difficult to construct housing on their side. My case is simple. Accessibility gets better on our side, and the government often starts to manage the way housing works, other than just individuals who also own housing, in a way that is beneficial. So first, let's explain why the price of housing rises, even if you don't buy my competition thing. First, because often this is an immense amount of investment that goes into this, because often you expect the rent to constantly come home, because people do not miss their rent or mortgage payments, because they think that, oh, if someone is buying a house, they lose the place which they're living in. Note this is about opt-out. You can't opt out of your house. If you go out of your house, often for a few days itself, you can die because of the weather, which is often really dangerous. And people are just terrified personally and psychologically by the idea of losing the safety of their home. Hence, often they will cut medical costs, they will eat lesser, they will spend lesser time on basic necessities just to make sure they stay in their house, because it is a prerequisite to maintaining anything at all. If you miss too many rent checks, you're kicked out because the corporation doesn't care if they lose a tenant for a few months, which means that often investment floods in. But that's bad, because you can't build that many houses very quickly, because there's a limited amount of space in locations which are close to industries that matter. So in a big urban city, you only have so much space, because after that point, you're too far away for it to be effectively connected. There's often not enough infrastructure. It's just difficult to move close. Hence, often this investment, because it doesn't directly lead to immediately rising in construction, just raises prices, which makes it very difficult to people to live their lives. But second, there's extremely bad checks in terms of risk, specifically for mortgage-backed securities. This is what happened in 2008. But we saw the same thing happen in Evergrande. Specifically, a huge amount of investment went into the company of Evergrande because it was building a lot of houses. And the logic was, of course, people are going to go into these houses. People always want to demand for houses. But the problem was there wasn't that much organic demand. So people lost a huge amount of money. More importantly, most of these investors are often individuals, people who think this is a safe investment, because larger investors go into the stock market. So they lose a lot of their money when they blindly believe that they will get demand, but often they do not. And this construction loses them a lot of money. And third, this increases volatility in the market wholesale, because when you cannot properly check the effectiveness of how likely someone is to pay their debts, which often you have an incentive to do if you want to sell your mortgage-backed securities, then often what ends up happening is that the entire industry related to housing starts to become really volatile. This looks like construction, which hires huge amounts of people and is often labor intensive. This looks like other things that relate to housing. For example, where you have actual realtors and sales agents who actually sell these houses in the first place, which are often a large part of this. So the more investment goes in, the larger the industry grows, but the increasing volatility that occurs in the first place. Now, our counterfactual and why is slightly better. Before that, quickly, Sio.
Yeah, I'm really confused. Aren't you conflating property developers with corporate landlords?
Presumably, developing a property then requires you to own it. You don't develop a property and then your logic then is they'll sell it to individuals. But again, if they're selling it to individuals, they're not counting on the rent, right? The individuals themselves have to get that rent, which is better. Why is it better on our side? There's much more actors in the market. First, because there's much less capital for individuals. Often, people don't have the amount of money to just buy a huge amount of houses themselves. They'll buy one or two houses which are like upper middle class individuals. Second, there's just more risk. In a company, you have a limited amount of money you can lose because it's the amount you've invested. As an individual, you can use all of your money, because at the point where you are sued for not maybe making sure that you give someone services, or for example, you have to keep a tenant in that's going to have to not pay properly. Often that means that you can be sued for your personal savings as well. In a company, you can only be sued for what you invested. So it's limited liability. But third of all, it's much easier to get sued for discrimination if you're an individual. If you don't fix the taps, if you evict someone unfairly, if you treat someone like shit, it's really hard to find a legal team to defend you, because people don't have the money to find all of these lawyers in the first place. On the other hand, someone prosecuting you often requires a lot less money, because that money comes from, oh, if I win the deal, I'll get it. And if there's a good chance of winning, then you're screwed. All of that means individuals are much better actors in the market. The impact of this I'm going to explain. Before that, quickly,
Why do you think that individuals have the money to be able to overtake the costs of owning multiple apartments?
Because often there are upper middle class individuals who literally want to invest in housing because it's stable. Second, most individuals don't have the money to invest in housing. Your logic is going to be they now pool it to make housing, and now they all own a little part of that housing and get a stable income from it. The problem with that argument is that it is only important if that increases the supply of housing. If it is the same house, but the price is increasing, it increases the chance of the person not paying rent and that person losing money. But anyway, of course, there's a huge amount of rich people who can build housing. And often the people who own the company with enough stocks will get certain parts of that housing in the first place. On that, these corporations probably do still exist and not corporations. People still invest in these markets. Finally, why do individuals make better decisions? And why is this likely to make people who live in these houses life better? First, you're less likely to keep it empty because you can't take the risk of someone not being there for a few months at the point where you're often paying back your mortgage or you have a lot of money that you need to earn to support like your basic living. At that point, you don't do what often many companies do, which is keep housing empty until you get a really high price, choking people out of money because they have nowhere else to go because they can't afford housing. But second, you're more likely to care about things like upkeep, which means that when tenants have a leaky roof that is destroying their health and you don't give a shit about it, they can't move to someone else. Sorry, they can move to someone else on our side because there's another house that is owned in the first place. But thirdly, it's just more competition. The impact of this is prices are more likely to go down on our side as opposed to consolidate on their side. People are going to buy houses on both sides. The difference is the scale at which that investment increases and the competition that an investment gets in the first place on that opening out.
I thank the speaker very much for their speech. I can confirm my panelists are ready, either by a virtual thumbs up or a physical one. Awesome. Perfect. I thank the speaker very much. Just a reminder, again, please do state your POI preference at the beginning of your speech, and please do respect each other's POI preferences, even if it is different to your own or what you're used to. Given that, then, we welcome the leader of the opposition to start the opposition bench. Here.
Hey, am I audible? I'll give OG a POI since they took from us to be, good top half. Sorry, CG. And I'll take you guys somewhere around 34th minute. POS in the chat. Do not unmute yourself, please, at any moment. It distracts me. Okay, starting in 3, 2, 1. Counterprop time, because this is a wood motion and we have counterprop fiat. Note, we can use part of their political capital to regulate this sort of thing. What are the specific regulations that we will stand for? Firstly, we will not allow monopolies to happen. So basically what BlackRock is doing in America, where they're trying to buy out the entire housing market, we will not allow this to happen. We're going to have a cap in certain amounts of companies so that the competition is fairly equal, right? What would this number be? It really depends on the context, but we think it will be so that there's a balance between actors. Secondly, and this is something that we don't have to counterpop, by the way, is that we'll have minimum financial requirements. So we'll have debt to cash ratios so that we're sure that these companies can pay off their debt, so they're not doing stupid shit. We'll also have a ratio of your real estate investment. So we'll say not go above 50% or something like that, so that you are putting all of your money basically in real estate and this sort of thing, which I think that's a reasonable number. Thirdly, notice that there is, accountability measures that the state has. It has internal auditors, like the tax man who goes and checks this sort of thing out. The state has all the time access to information and they can see if this sort of thing is happening. And there is, for example, for funds specifically, the SEC in the United States, but also this across the world, requires you to publish your financial reports and to have transparency over this sort of thing. Even absent of this, we're going to give you incentives as to why corporations will do this in a good way. But even if there is a minority of chances where this is done in a bad way, we can regulate this sort of thing. We don't have to do. And this is important here, by the way, because they have to explain to you why each and every corporation necessarily has bad incentives. They have not done this in this sort of case. So we think that the bad apples we can regulate, and on balance, they have good incentives. Our argument is going to be very simple. Due to these companies being able to have all of their scale and all of their economies, they're able to lower the price of wealth, which is very important for people who would otherwise not being able to have a home, and for people who are able to, use this reduced cost for themselves to live a better life, to invest in education for their children, to be able to have some kind of financial security, some kind of savings, to be able to put food on the table, to be able to have some kind of comfort. We think this is the most important thing in this debate, and we're going to win on it. Let's get into the argument. I'll first characterize the types of companies that do this sort of thing. Notice that OG did not do this. There are two types of companies. Firstly, in many cases, this is cat punch or big finance companies that are able to do this sort of thing. They use real estate as an investment for them to do this and to be able to get the cash flow to this sort of thing. But note, this does not mean that they're investing only in real estate. They invest in different things, in stocks, in bonds, in crypto sometimes, in these type of things. They have to have diversification in many of these cases. So they may own, for example, 30% of their portfolio may be housing. We're perfectly fine with that, but there are other things, etc. Secondly, any other company that's big enough that will choose to invest in this sort of thing, but we think it's majority fund funds in this sort of case. Why do these people have good incentives, these companies? And not the only, all of the examples and all of the logic that comes from opening government, there isn't a single structural reason as to why this is likely. Sure, we agree that this may happen in 10% of the situation, but we can regulate, but in the majority of cases, they have good incentives. Let's look at these incentives. Fourfold. Firstly, notice they have market incentives to be profitable. These companies are supposed to pay dividends to their shareholders or people who put money into these sort of things. So if they make, how do you say, a bad decision based on this sort of thing, or if they make this in a problematic way, how do you say, they're not going to be able to pay off their shareholders. So they're likely to do this in a competent way and like not over exceed the amount of real estate they have in this sort of thing. So this is why there's relative competition. Secondly, we can regulate it based upon all the reasons that we give. This sector is already severely regulated based on previous experiences, like for example, how do you say, 2008 crisis and all of these type of things where you had legislation and these type of things, etc. But notice, thirdly, is that these people, these actors are not stupid, and they're not stupid in a very specific way. They have very important internal risk departments in these sort of things. These are basically quant people who probably studied in LSE, like opening government, who all the time calculate risks. They all the time do market research, all the time do this sort of thing. So they're, how do you say, they're not going to do stupid decisions. And fourthly, they have competition between each others, both between other funds, but also other home makers who are in this sort of things. So the bottom line is these companies have good incentives, and how do you say, they're likely to do this in a good way. So what are they likely to do? They're able to lower the cost of these real estates. Before I get into that, OG or POI.
Look, the incentive of the corporation is always to make more profit. But if you will never pay like lesser than the amount given, because you have to keep your house, your incentive is to keep raising prices as much as possible.
I understand.
That is the majority of the
I understand that is not true because there's competition. These people are competent and they're likely to do this in a good way. First, why they will lower their prices in these types. First, here's how they lower the prices, right? And then why they will lower the prices, even though some of these send this. Firstly, notice that these companies have access to cheaper loans that the average person does not. Why? Firstly, because they're big enough to be able to get revenues in loans in bulk. So they're able to get $10 billion loan, for example. This $10 billion loan has lower interest rate than what than let's say 1,000 people would be able to get on their credit score. Why? Because you're getting money in bulk, and when you're getting such a big amount of money, there is, how do you say, security based on this sort of thing to be guaranteed, and the interest rate is lower in these sort of cases. This is why as the amount of loans get lower, the interest rates goes up. This means that the difference between the interest rate is not offset based on the loan, and they can lower this rate. Secondly, they have economies of scale, right? These people, these companies are big. They also have other profit streams that we explain to you, like stocks, bonds, and these type of things. So they're able to negotiate good deals with builders, right? So, for example, build me 10 projects and these type of things, and they're able to lower the cost because they're able to buy these, these projects in bulk, or they're able to take up refurbishing costs, etc., and these type of things. But secondly, they're independent of shock, and this is very important. In the status quo, if one on their side, if one, person owns two properties, and you lose the tenant in the one property and not able to find the person, you have an incentive to raise the rent of the other property in order to offset your costs. On our side, when these corporations lose certain percent of the tenants, they don't want to raise the rent in this sort of situation every other place to offset their costs because they have multiple revenue streams to do so, etc. Now we get the POI challenge. But why would they do this anyway? One, you have competition between existing landlords. These are all other funds, but also the traditional landlords. In order for you to establish yourself on the market, in order for you to do this particular thing, you need to give an offer that is lower than the comparative offer in this sort of case. Otherwise, you'll not be able to do this sort of thing. This is how the market regulates itself, and the equilibrium is to lower the price of this sort of thing when there is bigger competition based on scale. But secondly, just optics, right? If they have, put scandalous amounts of high loans on this sort of house, there is free media in many of these cases. They'll report this sort of thing. This means that there will be bad publicity for them. Firstly, these are publicly traded companies, so when there's bad publicity, their stock cost may go down in this sort of thing because they're viewed as problematic. But secondly, other revenue sources will also be screwed over because if they face backlash, nobody will want to do business with them based upon this particular link. So they want to act adequately, and they will want to lower the price if they can. We both explained to you incentive and ability to do so. This is the most important thing for two reasons. Firstly, people who would otherwise not have been home now are able to have a home. So this is a precondition for them to be able to access the good life, basically. If you have a home, you can get a job, you can do all of this sort of thing. But secondly, notice that middle class and rich people will own homes symmetrically. The difference is on poor people. So even if we have 300, 400 decrease of their rent, this is big impact in terms of their purchasing power. For all these reasons, opposed.
I thank the speaker very much for their speech and confirm my panelists are ready. Awesome. In which case, I welcome the Deputy Prime Minister to continue the government bench. Here.
Hi, can everyone hear me? Perfect. Give me 1 second to set up my papers. For POIs, I'm gonna try to take Sean and Dion from CO. So if you have a POI, just put it in the chat and I'll take you. If I'm not responsive, then just turn on your camera and wave, same as round 9. Cool. I'm going to start in 3, 2, 1. The first thing I want to make very clear is what the counterfactual likely is and respond to Ruman's POI to Sharia. We are okay if the world in which we live in is one in which individuals do not have the capacity to buy multiple houses, and therefore that is significantly more diversified or dispersed into individuals on the ground for 2 reasons. Number 1, in the worst case, this is okay for all of the preemptive weighing Sharia gives you, which is to say it means that there's higher degrees of leveraging power for individuals on the ground. In terms of weighing, this mechanizes all of opening opposition, because at best, opening opposition proves that the individuals at the top have an incentive to maximize profit, not why they have an incentive to give houses to the poor. We prove that incentive, which is to say there's higher degrees of competition, which means you have to have a race to the top in terms of who you rent to, because otherwise you will not have a renter. But second of all, irrespective of this, the counterfactual was quite important. The counterfactual on our side of the house is that the government likely steps in instances in which there is significant gaps in the market. This was likely for 3 reasons. Number 1, absent companies, which by the way, opening opposition characterizes to be super, super rich, the only other actor probably has the capacity to take some cost is the government. So they're likely the individuals that come in. Number 2, this is oftentimes in line with state incentive to, for example, expand infrastructure, provide services, all of those things. But third of all, oftentimes electoral incentives mean that there's a public will for the poor individuals on the ground that opening opposition talks about, for the state to buy up these properties and then distribute it. This looks like a lot of public housing property, for example, in places like Singapore and places like Asia. The reason why this is mutually exclusive, and this is important because this proves why access is less on opening opposition, is because when the company has access to it, oftentimes companies don't care about significant short-term harms. They're more willing to let the house go empty because they're able to significantly raise prices in the future and sell it off. But 2, oftentimes as a result of this, you have a lot of individuals who do not have access, because even if companies do have good incentives, they still charge rent. The only instances in which you give access to the poor individuals opening opposition talks about is if the state is willing to step in and do things, for example, like give subsidies, which is far more likely on our side, because the issue on their side is the state has an asymmetry of power against corporations who are significantly bigger than them and therefore is unable to compete with them. So the corporation is always able to hoard and monopolize. Even if they have antitrust laws, a few companies are still going to be bigger than the vast majority of states and the vast majority of countries. And as a result of that, you do not get the access to the type of government infrastructure we have. The second thing I want to do in response to opening opposition is to prove why their counterprop likely does not work. The first response is simply like, surely if their characterization is that these companies are so big, like once you have antitrust laws and break up the proportion they can take, like who is going to buy these up? Surely it's going to be subsidiaries of that company or other big companies that are equally big, which was problematic for the preemption Sharia gives that Alec now needs to deal with, which is to say, even if they're different companies, the perverse in the top are the same, because oftentimes they collude to do things like lobby. They oftentimes come together to equal pernicious laws that harm individuals on the ground, and oftentimes they have perverse incentives because they came from very similar types of elitist institutions or very similar types of background and are able to collectively benefit as a result of that. No, thank you. But second of all, this is quite problematic because even if it is true that one company is able to take the entirety of the market, our argument was that on the comparative, there's less incentive to compete if you're able to stand at the top. So as a result of that, what ends up happening is that there's significant degrees of cost on their side of the house. That means a lot of individuals are harmed. The response from leader of opposition is, no, that's not true, because A, people want to calculate risk, and 2, people want to make sure you can able to make money. The first response to that is exactly the reason why a lot of poor individuals don't have access to housing, because companies are far more willing to give to individuals who are significantly richer than them, even if there's, for example, example, a 2-month gap because you're able to make higher degrees of profit. But two, I just contest this premise. I don't think it's the case that individual companies are oftentimes risk averse or necessarily going to be good at calculating risk because they want to, for example, appease these shareholders that opening opposition talks about, which means they're more likely going to do a lot of the shady deals or a lot of, for example, risky deals that leads to higher prices writ large. Why then was this important? And here's how you weigh this. Number one, this means there's significantly less capacity for leverage, which beats opening opposition because we prove it's far harder for individuals on the ground to gain access. And this is also important in response to the argument on affordable housing, because I'm genuinely unsure why the companies oftentimes who are fairly elitist, who come from, for example, business schools with like college education, have an incentive to give the poor housing. The only instances in which you're able to guarantee that was on the comparative on our side. A, in which the state has more capacity to step in because of the counterfactual I give. But two, oftentimes increase in competition means that individual house owners who, for example, might be middle class, have more affinity towards the poor, have more affinity because of the personal touch that otherwise does not exist when you have a hollow company on their side of the house. There's higher degrees of affordability on our side. But three independent ways to weigh this argument. Number one, if it is the case that cost is higher, even if opening opposition proves it is accessible, the issue is that the trade-off here is that for the individuals who are vulnerable they want to talk about, they can get the house on both sides of the house, but in the worst case, or rather in the best case on their side, it means they have less money to spend on other things, which oftentimes is a prerequisite to them staying alive or achieving higher degrees of mobility, which was important. Number two, oftentimes the perceptual insecurity is a big impact as well on the ability for them to live their lives properly, because if you're unsure whether or not prices are going to rise for all of the reasons that this is a company, it is fairly distant, you do not have a personal connection, it affects you and causes mental duress that affects other facets of your interpersonal relationship and your work productivity. But three, and here's the kicker, in the best case on all of opening opposition, assume they give houses to poor individuals willy-nilly, even though I don't think leader of opposition proves the mechanism. That triggers all of our argument on why it's far likelier to cause economic collapse and crisis because companies are more likely to default, which is a massive impact, A, on scale, because it affects literally everyone in the country, B, on magnitude, because it literally means you don't have the capacity to stay alive anymore, and three, it literally affects every single facet of all of individual life. So assuming all get the benefit of companies giving to poor individuals, that means the company is more likely going to go bankrupt, which is all of our argument we give on crisis that DLO now has to respond to. Before I go talking about why government infrastructure is good, closing opposition.
So you give a series of reasons why governments have an incentive to solve for problems. Why wouldn't they have an incentive to do this, especially vis-a-vis the problem Sharia characterizes without doing this motion?
So because it's really expensive, states don't have that much money. Companies often have more money for the reason Alec and Ruben give, which means company cannot buy up a lot of the houses from these companies. We give them the ability to do so because we ban it, which means companies don't own it, so therefore states are able to go in. This is why we win. Also, that's a concession that governments do it well. Great. This proves the tipping point as to why governments are more likely going to be able to come in on our side of the house. Here's how you weigh this argument. Number one, this mechanizes a lot of the off-bench benefit on access, because surely what this means is that access is far better on our side. But two, this sidesteps a lot of the potential economic risk argument that Sharia gives you, for the reason that if an individual is the one bearing the brunt of this cost, they're likely going to be more careful. They're going to provide better services, but also it means companies are less likely going to default, which causes the macro harms in society, which opening opposition needs to deal with. But second of all, and this is quite important, oftentimes, quality of life is not only determined by whether or not you have a house, but whether or not there's excess land the state is able to use to do things, for example, like build parks, etc., or to do things of that nature. We get that uniquely on our side because the state only has the capacity to come in on our side of the house. But finally, even if you don't buy this, this is at least the most preferable, because on opposition side, you only get private individuals. At least on our side, you get an alternative set of incentives, which is that you get some degree of competition and a race to the top. That means you get better infrastructure writ large. For all those reasons, we get higher degrees of access on our side. Very happy to propose.
I thank the speaker very much for their speech, and if I can confirm, my panels are ready. Awesome. In which case, I welcome the Deputy Leader of the Opposition to close off top half. Here.
In 3, 2, 1. Pano, everybody in Bulgaria says I'm very bad at acting, and they are right. However, note that opening opposition already impacted why cost is the most important thing, why it's continuing on people accessing these sorts of things. So all we need to do is to rebut their reasons as to why these companies will be very scandalous, because they never responded to our reasons why these companies have the capacity to be good. They never engaged with economies of scale. They never engaged with cheaper loans. So all we need is that the incentive is rather to lower prices rather than to increase prices in comparison to the regular person, and we'll flip opening opposition's cost on point. Then I'll run a second point on how this causes short-term problems. But firstly, a couple of side rebuttals. One, they say the government steps in to fix big-time housing processes. Axio points out this concedes us, because if these corporations are very, very scandalous, then for all of the reasons they gave, government has an incentive to come in and to regulate them. They say this is expensive, but the government doesn't need to buy it from them. It just needs to tell them, no, bro, slow down a little bit. If this is such an important incentive as they outline, then presumably this would happen anyways. But the problem isn't individual housing prices, it's the aggregate, because in the aggregate, landlords are worse. In the aggregate, landlords need to keep prices higher because their cost of initially buying the apartment is much higher. Therefore, they cannot lower the price of rent because they need to pay out the mortgage of the interest rate of the loan they have taken to buy the individual apartment. These corporations can get loans at much lower interest rate, so they can afford to keep rent much lower in this sort of way. Secondly, they say counterprop is bad because subsidiaries will buy it. Will ban subsidiaries from buying it. It's as simple as that. We have the freedom to do this sort of thing. They never explain why it's extraordinarily likely for subsidiaries to buy it. All they say is collusion, but I'm going to rebut collusion in a second. Thirdly, they say this is risky, so it's going to cause long-term crisis. One, this is not true. For all of the reasons they said, whatever the fuck it was called failed. 2008 happened. They're not stupid. If opening government can figure this out in 15 minutes, presumably corporations can also figure this out when they have advisors and when they have all of these sorts of things. But we would argue it gets much worse on their side, because they say individual landlord is much less risk averse. Panel, individual landlord is way fucking stupider. They don't have the advisors. They don't have the knowledge in this sort of thing. So they're substantially more likely to take the decisions that are going to lead to riskier things, to failure later on. Plus, secondly, if failure happens, individual landlords are much more likely to default on loans they have taken, much more likely to need to sell their properties because they don't have an alternative revenue source to keep them up when the housing market is down. These funds, on the other side, do have an incentive to keep this sort of thing in the long run, and I'll explain this in a second, which means that even if crisis happens, it is much, much worse on their side when individual people own it. Finally, they say they're elitist. Why would elitist people want to lower their prices? This is the most Western debating thing. Money. If it makes more money, and will prove it makes more money, then I don't know, they could be studying at fucking Harvard, Warwick, and whatever, and they'll still lower the prices. Then, on to their points about monopoly. The first thing I want to do is outline an alternative. I would posit an alternative incentive, because they say their only incentive is to milk their consumers for maximum profit. This is bullshit. The reason this is bullshit is because this is not the most profitable thing you can invest in to make money. Stocks will always be disproportionately more profitable than housing and the rent that you make in this sort of way. So why do these big corporations make these sorts of investments? It's to mitigate the risk of their other investment in riskier investments like Bitcoin, like the stock market. What does this mean? They don't have an incentive to keep the apartments empty to leverage a higher price. They want the apartments to always be full because they care more about the revenue being constant rather than the revenue being higher, because they have alternative ways of making revenue. Note that on the other hand, the landowner has only one way of making revenue, and their incentive is always to make this revenue as high as possible, to always organize in the worst ways they can. Now, on to my rebuttals on monopoly. The first very obvious thing is we have the model to take it out. There are also incentives to take it out. Note that there are major movements that cheat on landlords, that cheat on all of these things. This industry is already regulated. They themselves explain why it's super important to people. So presumably, if people cannot access it, then we'll regulate it. What's the point on our side? The problem is you cannot regulate landlords because they cannot lower the price any further without losing money, because they don't have the ability to make this thing as profitable as these corporations, because their loans have higher interest rates and because they don't have economies of scale. But onto their rebuttals of their reasons, let's say this thing doesn't happen and we don't get our regulation at all. Why will monopoly still not happen? One, they say collusion. Collusion does not work. Why does it not work? Because when many corporations agree on one thing, only one corporation needs to exit out of this whole thing to fuck this up for everyone. Notice, corporations often have short-term incentives for individual people. They want to have a good quarter. They want to do these sorts of things. So they're an unreliable actor to collude with. You are not likely to collude with them. You're likely to compete with them. Not to mention that there's a lot of these things. What does this competition mean? You cannot keep your apartments empty because people will go to the other apartment, you need to lower this sort of thing. Secondly, they say they're going to slow down building. Two responses to this. One, this is not true. They actually have an incentive to expand the market. Why? Because they're currently coming in as the people who don't own the houses. Houses have historically been owned by landlords. So they need more houses to be built to be able to break into this sort of market. So they want more houses to be built, they'll get this increased supply of housing. But also secondly, even if they lobby against it, there are other lobbies, there are corporates who lobby you to build in this sort of way. And I don't understand why these corporations will just win by default. They know that even if some funds do this, other funds will lobby for comparatively more building because they want to compete with the funds that that lobby for less. Before I go on closing government. No. Okay. Thirdly, they say more investment.
Opening government?
Thirdly, they say more investment is actually bad. Why is it not bad? Because more things are built, this increases the number of houses that exist, and this increases the choice that the individual person has, decreases the bargaining power of each individual landlord in this sort of way. On their side, when there are fewer houses, because less corporations can tell builders, okay, build me a house so I can buy it in this sort of way, then there is comparatively less in this sort of way. But there are asymmetrical reasons why they care about not lowering the price that they don't engage with. They are publicly traded, so backlash they care far more about than individual landlords who are not publicly traded and for whom this is the only source of revenue. Quickly on our second argument. Notice that if you ban these corporations from owning it, they would now need to sell these things. Why are they not likely to be able to sell this super fast? Because they have been owning this for years. They have been building up their ownership for years. And now you tell them immediately, look, bro, you need to sell in this sort of way. You need to immediately get rid of these assets. What is this likely to bring to? Likely a much lowering of the housing market because there is a lot of supply of these houses coming in and not a lot of people willing to buy them. What does this then mean? One, these companies suffer massive losses because they're not able to sell them for market price. This is and also all other things attached to housing now get worse, like mortgage-backed securities, the big short. Why is this very bad? Because currently we're in a uniquely bad position for this to happen. There is a housing crisis in China. Coronavirus crisis happened. We cannot be adding on to this short-term crisis, meaning that even if this argument is in the short term, it has big impact. They should engage with this with us.
I thank the speaker very much for their speech, and I confirm my panelists are ready. Awesome. In which case, we turn to the closing half, and I welcome here.
Alrighty, POIs in the chat, please. Okay, starting in 3, 2, 1. Okay, going to do a little bit of direct refutation to the opening opposition, and then we're going to explain how we fit into the round as CG adding extension. I think what's important here, panel, is not all houses are the same. There is a massive difference between building a luxury high-rise in downtown New York, which is essentially a penthouse unit, and then there's things that are like relatively considered to be low-interest investments that are considered to be lower quality, but they're importantly the ones for which prices can actually go down. Because you can't just say, we'll build more luxury high-rises and then force them to put the price down. There's structural reasons I'm going to explain why that doesn't happen. So it's not just prices, panel. It's about how do we incentivize the kinds of housing that are going to be invested in on either side of the house. Just a couple points here. So I just want to engage with OG, first of all, on the idea of like price sensitivity. I think it's important to note here, panel, but if you're a corporation that, for example, owns a say, like 10 buildings, each with 100 units in them, you are collecting rent from essentially 1,000 different sources. If you have one unit that is suddenly vacated and you think you can get a higher price, you are not incentivized to take the first bidder. You are able to wait because you still have income coming in from all the other sources. If you own literally one house and you are renting out the basement, you are far less able to accrue income because there's literally no other options, because if you only own the one property, that is zero income over the time at which you have no resident. I think this is important to note here, panel, for the important reason that it also increases leverage of individuals. So for example, if you were someone that wants to maintain living in your locale, like wherever you happen to be living, but you want to fight things like ridiculous rent increases, like very often it's not just getting into housing that's hard, it's every year your lease lapses, your landlord is incentivized to jack up the price. It is very easy for like a massive owning company to just kick out whoever they want because they'll offer you a price. If you say no, they are likely to be able to find people to fill up those spots, largely because number one, market outreach. If you are literally a multi-billion-dollar company, you are able to access things like advertising and research resources to attract individuals to your location. And that attracts in number one interest, which can drive up the price. Number two, you are far more likely to be able to, again, survive if you try to raise the price and your tenant says, no thanks, I'll go find somewhere else. You're able to let them walk away. On our side of the house, at the very least, there's a marginal increase on the relative power differential between those renting and those owning property, which means in individual cases, like where you are dealing with, hey, I want to release this place, what's my rent increase going to be? Maybe the difference between a 10% increase and a 5% increase is whether or not you can fucking afford food. I think this is a massive impact whereby a reduction in power differential can be crucial for the important impacts that exist within the debate and really take down the ability of OO to characterize things like prices, whereby you have more properties, more bargaining power, and therefore the ability to get the price you want. Okay, let's just talk about the types of property here. So this is the CG extension. I wanted to note it's very important that in multiple countries, like cities around the world, housing is being built as we speak. But importantly, panel, it's not the kind of housing that we need. It is very often new units rather than refurbishment of existing ones. And number two, it's likely to be luxury units. Here are a couple structural reasons for that. Number one, with large corporations, they rely on like loans from the bank, or number two, investor confidence in order to like essentially justify purchasing or like building a new unit. This is most likely to be accrued when they can guarantee that the unit will be desirable for tenants and highly profitable. How do you do this? The easiest way for a fucking corporation to do that is tell their investors or tell the bank, look, we're going to go to this expensive downtown property where lots of people already live, and we're going to like make this really nice luxury unit and only sell it to people that are like a net worth of over $1 million. The reason that this is a successful strategy is because they are, number one, able to promise the bank we are likely to get high income tenants who are very likely to pay high prices reliably. The perception is, and it's not necessarily true, but unfortunately classism exists in this world on either side of the house, low income tenants are perceived as high risk because due to the low threshold they have to like afford increases in rent or afford increase in any other cost that affects their ability to pay rent. They're considered less likely to pay regularly and therefore higher risk. We also have, panel, the point that with investor confidence or ability to get loans on banks, with the scale you have of owning 100 properties, you're able to essentially put up your existing properties collateral in order to get that loan, which means you're more likely to build big towers or like large units of luxury housing. Whereas on our side, even if some luxury housing is still likely to exist, it is going to be a smaller portion of the market because you don't have the ability as a private investor to literally put up your 20 other properties as collateral or go to the bank and say, hey, I'm going to guarantee to get this like sweet downtown apartment complex. The upfront cost of luxury of housing is incredibly high. Therefore, we are more likely to only get lower cost housing on our side. Why is this the case? Number one, things like refurbishment of existing units is not sexy. No one likes the idea of like when they move into your dream apartment that it's been owned by 50 other people and like there's like a lot of, you can see the multiple layers of paint over the fucking like light switches. But ultimately, that's what gets people to be not homeless, and that's ultimately what is most necessary. You are unlikely to get that on government opposition world, whereby OO's very conception, you are answerable as a corporation to your investors who are very short-termist. They are most likely to want income quick, income high, and income like essentially from the best bidder. On our side, where you have individual landlords who are probably buying this property, and like if you're a 30-year-old investor for the first time buying a piece of property, you want to hold it over the totality of your life, you're probably more likely to go for something that is affordable and therefore will also be affordable to the individuals to whom you rent. I think when you rely on, as an individual landlord, number one, not paying the upfront cost, you don't have the immediate pressure to start paying off loans. So if I buy a cheap unit, I can pay cheap, I can get people to pay cheaper rent because the property is literally worth less, even if it's just a home. At least it's people to live there. But now, importantly, you're not having to pay off massive amounts of interest because it was a relatively cheap investment. And number two, you're more likely to be directly tied into the investment of that property because you're unable to just sell it off quickly. As a big corporation, when you have 10 units, selling off a ninth one because it's not as profitable and not bothering to try and fix units or make them more improved or more profitable is the easy thing to do. On our side, because it's not easy for one person to sell literally their one source of income, they are forced to make it livable, keep water running, keep paint from peeling. And therefore, on the individual issue of like literal human dignity for individuals that are renting, we are more likely to achieve that on our side of the house, which is obviously a massive impact.
But rich people have symmetric incentive and ability to own houses. The debate's delta is about poor people and housing for these types of individuals. But even if you're right, it's in a minority of the cases.
So here's where I'd engage, like literally give you your best case. Let's talk about condo complexes, which is basically where you have a bunch of people that all like chip in to build an apartment building. They all own one unit within it. On your world, it's probably one company that owns all 100 units in a building, and therefore they have no competition between those units because they literally own all of them. Even on our side, where it's 100 rich people each buy one condo unit, they're still in competition with each other because as soon as two units are up for rent at the same time within the same building, they are competed on the same ground and therefore likely to have to go down on prices because they're not competing between a apartment complexes, we are competed within apartment complexes on a more level ground, where essentially you get more free competition because you can't justify charging $100 more than the unit literally down the hallway. I think all of those impacts likely mean that housing is going to be focused away from luxury development because of the upfront costs are difficult to achieve. It is less incentivized for individuals that are going for more stable, lower interest investments. And number three, we are more likely to get investment between things like condo units where you don't own the whole building and you're not competing building to building, but within buildings where you get more essentially free market interaction and competition of prices. For those reasons, we get less focus on building bougie ass like high rises downtown, and much better housing that actually meets people's needs. So proud to propose.
Really sorry. Could I just run to the toilet for a second? Thanks.
All right, Sean's back. Sorry about that.
Those 2 secs. Just confirm my panelists. Oh, thanks, speaker, very much for their speech. Confirm my panelists are ready. 1, 2, 3. Yeah, awesome. In which case, I welcome the member of opposition to begin the closing up case. Here.
Got it. I'm assuming from all of that I can be heard. POIs in the chat, please. Thanks very much. Right, starting my speech in 3, 2, 1. Let's have a chat about 2 things. 1, minimizing harm to tenants and why that's important. 2, mitigating property bubbles and why that's fucking important. But first, let's take out opening. The main debate in the opening half was purely based on economics, more specifically on rent prices. That's really boring for a few reasons. 1, lots of countries already have rent control. So really, if the comparative benefit OO gives us is that people can afford rent now when they previously didn't, then I think they lose. Why is rent control likely to continue to exist? Based on what OG said, the response on that is probably going to be something like, but companies are damn rich and they can control governments. But there are a few responses to this. The first is that rent is one of the main ways that the left have been able to fully engage the population. Look at New York, for instance. And the reason for this is because rent is something that lots of people can relate to across demographical boundaries. Everyone needs a roof over their heads, regardless of how expensive housing is. It's usually one of the biggest sources of spending for an individual. That makes it a really important hot button issue in any political campaign. Any attempt towards sky-high rent, ironically, therefore, increases pressure on rent control measures. The other met that OG gives is the constraining of housing supplies. But the conflation between developers and landlords kills OG, because the developer always wants to build more houses because that's their primary way of achieving a greater profit. If you don't have houses to sell, you don't have money to make. And if OG's response is the developer is the landlord, bro, that's what antitrust laws are for. You can literally just ban the entangling of the two to ensure competing incentives. CG's claim is that this debate is on luxury apartments. That doesn't answer the motion because it doesn't explain why other corporate landlords who want to go into middle-class units cannot do so. Also, there's a limited market for bourgeois apartments, so obviously companies that don't go into that market or cannot access that market because it's a limited market will still go into middle-class housing anyway. CG is trying to take a lower burden than they must. This debate is therefore about this debate is just not one about price, but one about quality of life of the tenants. OO is the theme of the missing counterfactual. What is this counterfactual? The counterfactual is one where all rentiers are mom and pop tenants, i.e. the status quo where individual rich people buy houses or themselves take a loan to try and get into a housing bubble that may exist. Couple of framing things I want to bring out. How are corporate landlords different from individual tenants? They differ in 2 ways. 1, they own way more property and they likely therefore have standard operating procedures to streamline how apartments are rented. Things like rental rates, for example. Things like, because it's obviously very hard to have different rules for different houses. Second, like there's far more people that know about them. There's a much larger sample size if you go on the internet to search for reviews, for example. This is that are much more likely to raise eyebrows if you do really fucked up things. What are the consequential outcomes? The main thing I want to point out is that individual tenants can be shitheads. Sometimes you need to rent in a particular location and there's not a lot of tenants in that location, i.e. you must go to one individual tenant. The problem here is that even if you see a bad review for the tenant, the sample size is often too small and you kind of like are forced to rent from a limited available number of units in that area. But the corporate incentive is to not have too many bad reviews from all of the places in New York, which means standardization. It means that it doesn't matter that you have a monopoly over the local area, they will still have some degree of standardization because any claim or any bad review from any location hurts the company's bottom line because it reduces their reputation. Why is this really bad? The first thing I want to point out is that individual tenants are more likely to do things like forced evictions because the individual whims and fancies of mom and pop rentiers are then fucked up. They own the house, they can do whatever you want, they want about it. Even if it, like as an individual rentier, you don't always have an incentive to evict somebody. Lots of cases have existed, even in Singapore, even in public housing, where for no reason whatsoever, just because you don't like somebody's face, you're able to kick people out of housing, put them onto the streets in a really dangerous situation. I think that's bad. But this is most likely to hurt minorities because obviously a company doesn't want to be seen as racist or homophobic, insofar as that obviously is going to be a massive hit to their reputation. But individual tenants don't give as much of a fuck, right? They are more pulled by their personal beliefs, for example, or there's a greater share of their individual interests, just as opposed to just wanting passive income. By the way, please stop turning on your camera, it's very distracting. Okay, so anyway, the point I'm trying to make therefore is that insofar as like things like you have like other interests that outweigh the profit margin, you're far more likely to hurt minorities in the long term. Why are companies better? They're better because they're more reactive to clients. They have entire corporate teams that can use their economies of scale, not just to push prices down like OO claims in a hypothetical world without price control, but to send teams to fix your apartment if something is wrong. Like they can, in the middle of the night, if your water heater stops working, they can go down and fix that for you immediately because they have economies of scale. The individual tenant has no capacity to do any of this because they're obviously a small, like a relatively far smaller individual, and they don't have the ability to stay up 24 hours to take care of your every whim and fancy. Why do all of these things matter? Number one, because it's not just about having a house. Your house is incredibly important for your stability, yes, but knowing that but your house is also the place that you go back to rest and to relax, to have a good quality of life in your house, to not be like fearing eviction are all incredibly important things, way more important than just knowing that you have a house or being able to buy a house in the first place. Knowing a company that you can call on hand makes you really assured that where you're living in is a safe area, that you're not going to face a lot of different problems with your house in the long term. That's incredibly important for your quality of life. But second, a market with only individual tenants decreases the quality of standards overall, and this is important because now at the very least individual tenants must match the corporate standardization, because otherwise they're never going to be able to like rent out houses, and that means that they will do things like, for instance, compete on quality as well. Second thing on property bubbles. Why do property bubbles form? The main but before that, yeah, sure, OG, quickly.
Most homeowners are scared of losing money. That's why they offer a reasonable rent that won't lead to a crash and will keep your quality of life high. But big companies like Evergrande are fine offering cheap loans, which lead to the crises that OO says will never happen.
Okay, first of all, I'm responsive to OO, but I'm also going to point out why individuals are not as clever as they think and don't have that kind of incentives. The problem here is that individuals are stupid, right? They buy into property bubbles for things like animal spirits. When they see housing prices go up and they think they can get into the market, they take out loans as a result and they think, I can get in on that market because it's a very short-term ability to make money. Corporate landlords is an important fail-safe against housing bubbles because they have an active incentive to not lose the 40% of their company that goes into housing. They have economists that have learned from 2008 and understood what happened. They have experts who know how to not make the same mistakes. So, as a corporate landlord, you can choose not to raise prices. You can buy over developer units for cheaper than the individual landlord would, given the market rate of a house, to cool the market, and that's really important in avoiding a property bubble. Second, in the worst case scenario where a housing collapse does happen, they give mom and pop rentiers a way out because they have the capital to think long term, to see a lowly priced apartment in a shit area as something they can invest in. This gives these people who are now affected by a housing collapse the ability to sell to these corporate landlords, whereas otherwise they only have a toxic asset they can do nothing with in the long term. They have no way to jettison their far less lucrative asset. The impact of this is that we mitigate the risk of property bubbles, and that's damn important because the economic outcomes that we avoid is incredibly huge to not just like rentiers and not just tenants, but to everybody in society. You saw what happened in 2008, you know why that's a bad thing. Even reducing the risk of that by 10% has a massive consequential benefit to the economy and to society as a whole. That's why we stand on CEO.
Thank the speaker very much for their speech. That my panelists are ready. Awesome. In which case, I welcome the government whip to close off the government bench. Here.
Okay, awesome. Can I be heard? Cool. I will count you down before I start my speech. POIs in chat, please. I will take one after the 5-minute mark, and give me a couple seconds to gather my thoughts. Okay, starting my speech in 3, 2, 1. Go. Panel, I'm going to structure the speech very simply. I'm going to clash with each of the teams, CG, OG, and then weigh out against all the teams in the round. But I want to make one note of one point of general clash, that no team in this round has so far understood that housing is limited, space is limited, and good housing and good space is scarce, not just limited. And I think we are the only team on CG who recognizes this fact. Hence, we're able to make a case that actually makes the most amount of sense and is most realistic in our impacts, but also the scale of our impacts affects the most vulnerable. Okay, coming to closing opposition and why, what the problems generally with their case. First, I just want to rebuild a rebuild against their clash and respond to the clash they brought out against our case. So their only response, the strongest response, or what they call the strongest response to our case, was the idea that, oh, but why can't affordable housing still exist on their side? For a couple of reasons. I think Lachlan and actually opening opposition as well already mech'd out the idea that loans are only accessible, for example, to big corporations. So you don't have the ability to, as like a low cost housing builder, to get a loan to build a low cost affordable house, right? And additionally, banks don't have incentives to give you loans if you're not going to make good returns on those loans, and you're not definitely not considered a sound investment if you're renting to affordable housing tenants who are considered higher risk, but also if you're just not making enough money in the process. But no, B, space is just highly limited, right? You can't just keep expanding cities outward and outward. And if you can, again, housing on those edge of the cities, I think no team can ever claim that that is good housing if you have to bus for 2 hours all the way into the city for work. So in that world, where space is limited, naturally, if you're going to have more corporations that build houses in prime spaces, that automatically means you have less affordable housing in those very spaces. And by default, the more corporations grow, which a greater likelihood of growing, you're going to have less housing. So in that case, after that being said, our case still stands. But note, let's weigh it against their case, because most of the clash is automatically weighed there. The idea that they tell you that individual landlords can be shitty and we want to avoid the harm that individual landlords have on in general on tenants. Note, the individual landlords become shittier on their side of the house, specifically because A, they have less competition against other individual landlords. B, if they're the only ones having affordable housing, note the demand for affordable housing is always going to be high, but the minute you start crowding out affordable housing, there's only a few of them that are able to still remain as landlords for affordable housing. They have a greater power within the dynamic of the market because there's less supply and more demand for affordable housing, and they are automatically shittier and take more advantage of the most vulnerable in this motion. Second, they're companies are unlikely to be racist because of things like public image. No, 3 reasons why companies are still likely to be extremely problematic, and specifically because of the power dynamics that exist. A, companies are as in general harder to sue, specifically because you have massive lawyer teams and massive amounts of funds that are available to companies that they're able to avoid being sued, simply because if you sue them for a racist practice, they're either going to try to settle it privately and continue their racist practice, or B, they're going to straight up lawyer up and win a court case because they have the ability to withstand a long trial. No one actually thinks that public justice, the criminal justice system of the civil courts, are going to naturally give justice to a lot of people. B, empathy. Note, if you are a person of color or a marginalized person, corporations are actually less likely to be empathetic to the fact that it might be harder for you to get a job because you actually face discrimination out in the real world. Whereas on our side of the house, if you have more individual landlords, there's a human element that you're still able to face some kind of empathy towards individuals who come from marginalized backgrounds. C, as Lachlan already mechanized, massive corporations and these companies don't build affordable housing, so you're unlikely to have the most vulnerable actors on their side of the house who are naturally going to be super immune and vulnerable to discrimination. Cool. Coming to opening opposition and the problems with their case. I think their entire case was hinged upon how you get cheaper prices. So insofar as I can prove to you, you don't get cheaper housing on their side, they're already out of this debate. When they talk about things like market incentives, why they work for corporations, or incentives just to not be stupid, note all of those reasons, which is a significant chunk of their MEC, are symmetric. Individual landlords are also not stupid. Individual landlords also have incentives to make money. And so they're naturally also likely to have like lower prices and keep their houses occupied, as opposed to like keeping rent high and like kicking people out and like, you know, for some reason hoping that people will still pay higher rent for them, right? No, this entire MEC of price gouging is ridiculous, because they tell you that if an individual landlord has two separate units, and if one unit becomes like unoccupied, they're going to radically, like absurdly and arbitrarily raise rent on the other, which is how the price gouging works on their world. Well, guess what? If individual landlords are price sensitive, consumers are even more price sensitive. So if you arbitrarily raise rents on your other property, they're also going to fucking leave, right? So I think the best option that individual landlords have in that kind of a world is be actually sensitive to prices and reduce the price, because apparently market demand has gone down, or their housing is no longer as valuable. Corporations, on the other hand, are unwilling to do that, as OG already mentioned. So I'm not going to say it again, but corporations can hold out longer for market demand to resurge and actually keep prices high. So corporations prevent prices from falling during times of recession. Individual landlords won't. But again, there are cases about increasing housing supply. Build more housing where? There's a fucking limited space in like the most downtown central parts of like the cities, which is where largely like corporate housing or like housing that is owned by companies is built. Like massive apartment complexes don't get built on the fringes of the city. They get built in prime spaces. So you're not as so much as building more houses as much as you're breaking down existing affordable houses and making luxury apartments as Lachlan mechanized. I'll take your POI.
We explained that corporations have good incentives based on real estate being a safe asset, external accountability from wider society, which CEO completely repeat in this debate, which flip your case because you will never invest in bougie-ass apartments, but you will invest for stable rent from the poor.
Cool. Again, just because you have external like accountability doesn't mean you will invest in stable housing for the poor. I think that there's a lot of lacking in your mechanism there. But additionally, that you have straight legal obligations that regulate individual landlords, and you have to explain why those legal regulations are not enough in status quo to like necessarily, or like enough on our side of the house, why they won't exist or why they won't be enough, that you need external sources of accountability on corporations that make it better. Cool. Coming to their like case about like their POI about how rich people like generally have the incentives to do it on either side of the house and make housing, like already lock in mechanized competition. But a second response to that is it's just difficult to have collective action amongst a bunch of rich people to build like 100 apartment luxury tower. So you're going to see less luxury towers on our side of the house because you don't have like there's a necessary like collective action of like 100 rich people getting together and buying like one condo each, and that it's significantly easier for a corporation to make it and then sell it to rich people. Weighing their best case situation then is when you have cheaper rents relative to cost, but the housing that is built is still high quality and high like expensive housing. So on the best case, you still crowd out affordable housing. And compared to that on our side, we significantly get more affordable housing as weighing against opening government as well. Then I think OG talks largely about like market mechanisms and why like prices on like as a whole go up and down. I think we target and impact the most vulnerable actors within the round and show you why affordable housing necessarily gets worse on their side of the house or in status quo, and how we are able to make significant changes in it on our side. We're so proud to stand in proposition.
I thank the speaker very much for their speech. I confirm my panelists are ready. Awesome. In which case, I thank the speaker very much, and I welcome the opposition whip to conclude off the closing op case, the op bench, and this octo final for Belgrade WUDC 2022. Op whip.
All right, thanks. Can you hear me?
You're a little quiet. Can you just do that again? Sorry.
Can you hear me?
Yeah, that's perfect. Cheers.
Okay, steady, thanks. Right. Yeah, starting in 3, 2, 1. Panel, in closing opposition, there were 2 extensions we thought were distinct and important. The first was an explanation on why uniquely we affected the quality of life for tenants significantly. Second, on the broad economic existential outcomes in this debate that we were able to protect, directly flipping opening government, because we explained why these companies shared the risk with property developers and consequently significantly mitigated the risks of bubbles that might exist. No response from that side. Oh, okay, fuck off and stop switching your camera seriously. The first thing I want to do is weigh this opening discussion on price. The first thing I want to explain is why this discussion is disingenuous and frankly quite lame. There are 3 important reasons. The first is the discussion of uncertainty, because OO is correct that different companies companies are different. That means that each of them view their strategies differently in terms of how they want to expand, especially given some might be bigger, some might be smaller. But second, also OO is quite specific. A lot of them are actually quite specific to hedge funds and companies that might primarily want to rent come out in this regard. So I don't actually think OO has a win on price. But secondly, the opening debate exists as if governments don't exist to regulate. OO selectively pretends that the government exists to regulate monopolies, but magically doesn't exist in price. The only explanation DLO gives is to say that landlords can't reduce prices on either side of the house. The problem is that this assumes zero middle ground between regulating prices and landlords being able to profit, and assumes that the market and government that they want to hide behind can't correct for these problems. I think this is a highly unrealistic context that suggests that as per the reality in most developed countries around the world and developing countries with high urban percentages of people, that rent controls are likely to exist to mitigate for the discussion on price. But more than that, I think OG's reasons for governments wanting to act apply even without en masse owning houses on that side, which they concede is expensive, doesn't explain why other alternatives like rent control can't exist to mitigate, or eviction control, for example, to mitigate for the problems that they say there's so much political incentive to solve for in the status quo. I also want to note that it's unclear to me why a restriction of money applies when maintaining all rentals on that side of the house in opening government. But finally, I want to note, in terms of this discussion on governments existing in the debate, that closing government directly knifes OG, because OG's reason for governments not entering the market to solve for problems is a claim that they must compete with corporations for housing in the same area. The problem is that CG says that these companies don't care about housing in these areas because they're going to consolidate housing only within the richest areas like Park Lane in New York, for example. So these two claims can't coexist. The third thing I want to note on price though is that the worst case scenario is you live further. And I agree that this is probably quite inconvenient to some extent. But trade-offs are constantly made by people when they choose to buy houses. And it's not clear why a slightly longer transport isn't something people aren't willing to trade off for better quality of housing and for cheaper rental. On the comparative, I posit that companies that have houses further are uniquely able to compete in other ways. One, on price, but too often in terms of transport options. In Singapore, condominiums will try to get buyers in more rural areas or faraway areas, offer things like shuttle buses to the city so that they're able to attract buyers. These are things that uniquely corporations can do on our side of the house to mitigate for the potential of living further. So I genuinely think that this idea of cost is not the primary issue in the debate. Their claim is that loans won't exist. The problem here is that, and uniquely exists on that side, the problem is that property developers have multiple investments, which means that they're still able to leverage the fact that there's so many investments to continue to get cheap loans at cheap prices. But secondly, I want to note that even insofar as it's lower cost because it's more rural areas or not so central areas, then that means that it's still profitable investment because you might sell for less, but your cost of investment is also less, which in turn means that the profitability is still there. I want to directly deal with closing government here because their claim is only going to be luxury areas, and that's the centerpiece for all of their other claims in the debate. First and foremost, Dion tells you that there's a limited market and banks are aware of this, which in turn means they're not likely to keep lending to the same market, trying to cater to the same renters. But secondly, it's actually the least captive market because these individuals can have alternative housing options if they live in luxury, for example. For example, like renting hotels, service apartments, all of which mean that on that side of the house, OG's mechanisms explain why this is an unlikely situation to exist. But third, the reality of gentrification and the centralization of similar industries means that it's unlikely that these people are trying to rent in the same area, which means that we are still able to provide cheaper housing, or different corporations are likely want to provide cheaper housing in more rural areas, like how Columbia is in Harlem, which is a world away from Wall Street and Park Lane, where these outcomes presumably exist. Opening government.
Standardized renting procedures and laws exist symmetrically to mitigate bad homeowners for your own political analysis, and landowners compete a lot more. A few small companies can lobby because they're billionaires against all the regulations that you try to fiat about rent control, hence raising prices.
Your claim is you can lobby against the regulation, but you can't lobby against being shut down. That makes no sense, actually, because presumably you need continual regulation of this to prevent people forming equivalent cartels between individuals on your side of the house. Secondly, how do we increase quality of life? And I want to note, it's just intellectually dishonest, right? They say nothing about anything except price within this debate. We told you that individual landlords suffer on capacity and incentive. There are two responses I get from the government with. The first thing they say is there's a decrease in competition, but that doesn't make any sense because individuals can't run as many like corporations, as many houses, like they can't buy as many houses, that means that your logic of desperation is a reason for why they will decrease prices, is equally a reason for why they will increase the level of the quality of housing that exists on that side of the house, which means that in the status quo, this competition still does exist. Also, this clearly exists between corporation and corporation, because what Dion tells you is that if you are a corporation trying to rent out these houses, you don't want to put all your like eggs in one basket in an area that may, for example, potentially decrease in value over the years. That means that you're likely to compete in multiple regions and have the developments in multiple regions or buy apartments in multiple regions. In turn, that means that OG's claim that these corporations have incentive to not build near each other is false, because all of them want to spread their risk and consequently want to compete against each other. The next claim they make is corporations are hard to sue. This doesn't actually respond. One, because there's an economic incentive against individual racism, because money is the same no matter who you rent it to. It is a subjective biases that stop people wanting to rent out to minorities. And that means that therefore there's a natural incentive for you to rent out to minorities regardless of the risk of lawsuits. But secondly, the competitive incentive predates the court, right? Which means that the court doesn't matter because it wants to be able to have better services in order to sell to people. But also these lawsuits tend to go through government regulation, especially given OG's analysis for why this is a politically salient issue, which in turn means the cost is not borne by the individual. But secondly, we told you about capacity to cater to the renter that wasn't responded to on that side. This is really important because the quality of life is a significant impact. Dion tells you how this impacts your life, but two more reasons why this is the most important in the debate. First, you can't adjust your expenditure to accommodate to a shit home, whereas you can adjust your expenditure to accommodate to the prices being marginally higher on that side of the house. Secondly, nobody is going to regulate or empathize with your situation because the idea of quality of life is uniquely unquantifiable on that side of the house. So it's harder for people to regulate, and harder for people to regulate that there's like a better standard of provision that you need to give your clients vis-a-vis price, which is a lot easier to regulate. In reality, if you think about the real world and the way in which governments act, we are clearly the winning team in this debate.
I thank the speaker very much for their speech, and indeed everyone. It was an excellent debate. If you can please now exit the Zoom. Please cross the floor, shake hands virtually, and the results will be announced later. Thank you.
Thank you all.
Thank you.
Wings, obviously, please stay here.